Let's turn our attention back to the volatility that we've been seeing in the market, particularly in the bond market. Shah Gilani is standing by, Chief Investment Strategist, Money Map Press. Mr. Shah Gilani, great to see you. I know that you watch these markets, you participate day in and day out. What's it all telling you?
This is the first time in some while I've been on the cautious side of things, Nicole, and that's because obviously the 10-year spiking. Now it's about 1.72% yield. Don't forget, it was about 0.52% in August, nearing about 1% in January, and now it's spiked up to this level, which is somewhat disconcerting, especially for tech sector stocks. So what we're seeing here is, I think we're going to continue to see is volatility as a result of the 10-year probably continuing to rise. It wouldn't surprise me to see the 10-year up around 2.25 within a matter of maybe 1 to 2 quarters. It wouldn't surprise me to see the 10-year at close to 3% by year end as the economy continues to climb out of this ugly recession. Actually, it was technically a depression, and I think we're going to see a lot of strong growth. The consumer's in great shape. Savings are high. Delinquencies on credit cards are at an all-time record low. The consumer's in great shape. I think they're going to come out of this, the pandemic, and raring to spend. I think the economy is going to get very hot, and that worries me in terms of the 10-year yield, and that worries me in terms of what that'll do to equity volatility.
Wow, those are some big projections, Shah. I have not heard people talking about some of those bond yields the way you're saying in the next couple of quarters when you're talking about 2.5%, even 3%. I mean, even Goldman Sachs came out, and what were they saying? 1.9%. So you definitely see, people are using the term the roaring 20s, that this economy is really going to heat up. So my question to you then becomes, do you buy the dips? Does the Fed come in and spook the market somehow, and then there may be some other dips or correction or crazy volatility?
A great question, and the answer is straightforward. Absolutely buy the dips. Right now, the tech dip is a perfect example. Doesn't mean that tech can't dip a little bit more as rates continue to rise based on the valuation metrics and how interest rates are incorporated into most traditional valuation metrics for growth stocks. And that's why they're getting hit. But they are all solid. Obviously, the earnings are great. Everything is continuing to be good for all of the leading big mega cap tech stocks. So every dip, to me, is a buying opportunity. We own them. We're going to actually buy lower, more at lower levels because we like those companies that much. But it doesn't mean it's a kind of throw anything at the dartboard environment anymore. The Fed is going to they made it very clear on Wednesday that they are going to do everything in their power to keep rates low. But what I don't think they are going to do is stop the momentum of the bond market moving on its own. If the Fed steps in and tries to squash the natural momentum of rates rising in a growing economy, that's just going to create a larger potential bubble. And I don't think they're going to do that. They're going to let rates go as long as they're, quote unquote, not disorderly. And I haven't seen anything really disorderly happen yet. And I don't think we're going to see that. Right. So it's indicative of good, solid growth to see interest rates rise. So that's not a problem. It's just a problem for some sectors.
Yeah, I mean, we love to see the reopening, and I'd love to see the economy kick it into gear. I mean, they gave us some new GDP numbers that were looking good, right? So they expect strength too, the Fed. I mean, right? I mean, there's no doubt. His language talked about some great stuff. He gave a cautious tone, but some great stuff going forward. So I just have two questions. The first is, you said buy tech on the dip. So when you're saying buy tech, are you saying triple Qs? Are you saying the SMH? And I'd like to know what that means when you say buy tech on the dips. And then also you have options trades on names like PayPal and Match. And I wanted you to explain some strategies that people can use.
As far as tech, yes, if you want to go all in, certainly the triple Qs are a good way to play the entire sector. We like Amazon down here on the dip. We like Apple down here on the dip. So those are two big mega caps that we absolutely love. If they go any lower, we're going to continue to add to our positions. As far as what we've been doing, because I'm a little bit concerned about what the yield has been doing on the 10-year, is we have been selling put options on companies whose stock we want to get into. So these are companies like PayPal, like Match Inc., that we want to get into. Several others, including now we're also doing the same with Bud. We've done that with Bud. We're going to continue to do with some of these big names. We're selling put options because if the company stocks come down, prices come down, we want to own them anyway. So by selling puts, we could get assigned and end up owning the shares that we want of the companies that we want at lower levels. As has been the case, these companies have been doing just fine, and their stock prices have been going higher, if not just steady, and we just get to keep all of the premium that we get for selling those puts. So it's been a win-win situation. We're happy to buy in lower. We haven't had the opportunity, save in one position. All of the other positions, we had quite a few of them expiring today, being quarterly expiration day, and we just collected and kept all of the premium on all of those options, put options that we sold. So we like that strategy. We think it's a smart way to continue to try and buy the dips.
All right, Shah Gilani, thank you so much for all of that. And you always, bring us the reality, right? There's always good and bad, but ways to play it. Shah Gilani, thank you. Chief Investment Strategist, Money Map Press, a lifetime of experience. I know you always have a way and a strategy. Thank you.